Hey there, and welcome to another episode of the Fi Guys. Today, we're diving deep into the world of finance, entrepreneurship, and what it really takes to succeed with over 30 years of wisdom from our incredible guest, Patrick Wood. Patrick's journey is a masterclass in discipline, resilience, and innovation. From his early days as a stockbroker to leading the groundbreaking work at DelphX Capital Markets, he's sharing stories you won't hear anywhere else about navigating challenges, embracing calculated risks, and redefining financial independence. But it's not just about numbers and markets. This episode uncovers the core values that drive success, the evolving impacts of technology on finances, and how Patrick balances it all while raising his family in today's fast-paced world. If you've ever wondered how to model success, take smart risks, or create meaningful work that lasts, this episode is packed with actionable insights you won't want to miss. So stick around and let's get into it. This is the Fi Guys. Let's meet Patrick.
I've been in the financial services industry and capital market space for, I guess, about the last 30 years or so, working in places like Canada, across the US, and to some extent globally. I think over my career in financial services and capital markets, I've really kind of worn pretty much every hat you could wear. Investment advisor, stockbroker, investment advisor, bond trader, institutional salesman, CEO, running my own investment advisory company, and like I said, pretty much I think that covers almost every hat you can wear in the space. There's a few others that are out of there, but for the most part, like I said, I've had a really varied experience and definitely a full life so far. Hopefully, with a lot more left to go after this. But yeah, that in essence is my story. I'm currently working with a public company, filling the role of CEO for that company. We're based out of New York, and it's a company that really focuses on the credit markets, developing new and innovative products for the credit markets, which is a very interesting thing because New York and, I call it Wall Street, but it's no longer Wall Street. Let's just call it New York business. Really the innovation in capital markets has really slowed down, specifically in the credit markets area over the last 20 years or so. In fact, I don't think there's even been one innovation in the space. So with the company that I'm heading, a company named DelphX Capital Markets, we're launching a product which once again is very new. It's it's a brand new tool for folks who need protection against downgrades in their bond portfolios. So think about insurance companies who have capital charges when their bonds get downgraded. The pain points are there, and there's no product which addresses that. So being a small little company like we have, and with New York asleep at the wheel as far as innovation and developing new products, we've really been able to come in and tackle it. But more relevant to this discussion probably is just around my history in being a stockbroker, the investment advisory aspect of things. I spent probably the first, 10 years or so of my career really, embedded in that industry in the early 90s, all the way through actually into the early 2000s. So, like I said, that space I think is probably pretty relevant, but I think it all kind of comes together because once again in capital markets we all kind of do the same thing. We all have responsibilities, fiduciary duties. We all have KYCs. We all have compliance, obviously, which is always there in no matter what we do. Such that there's a lot of crossover and a lot of parallels between them all. But yeah, so thinking about what it was like being a stockbroker back in the day, I think that might be something that we could really chew on and talk about, because I know that today is a lot different than it used to be. But I think how it's emerged is very interesting. But like I said, I started out as a stockbroker and moved into, and at the time they were really moving the business over to an asset management business, an asset gathering business. Very different from stockbroker. But if you look at movies that are out there which describe that business back in the day, they really kind of focus on the seedier part of things. So the one with, I think, what was it, The Wolf of Wall Street? It's like really seedy stuff. Boiler Room was another one that Ben Affleck did back in the day. Some of that, though, really did cross over. And I remember working in a bullpen, and that's the reason why I became a stockbroker. But it wasn't to sell really bad deals. It was really focused more on transactions and selling clients really good ideas and good companies, and that's how it used to be back in the past. So I'll just kind of stop there. I'll take a breather, see where you want
Yeah.
to where you want to navigate this discussion, and we
Well,
can dig deeper.
of course, that's wonderful. I see the narrative coming together in my head, and I definitely want to go back and let's double click on before you even went into the stockbroker, before you went into the boiler room, onto the trading floor, as it were. What got you into finance growing up? Did your parents teach you about money? Did you study that in school? What was even the ethos way before we even entered the New York scene? What happened
Yeah.
before then?
So fair question. I was a greedy little kid. I loved making money. When I was 7 years old, my whole room was for sale. So if my parents had anyone come through the home, I would, drive them up to or take them up to my room and try to sell them everything that I had in the room, price tags, etc. So I was a real little capitalist from the start, and I loved making money. But to be quite frank, Chris, our whole family is in capital markets. So my father was in capital markets successfully, ran one of the largest consulting businesses in North America for years, still runs it. And he has an ETF that's out there, which really focuses on what they do. I've had cousins run hedge funds, work in M&A, investment banking, etc. My sister even, and her husband, he's still an investment banker on Wall Street. But yeah, so we all are really embedded in the space. So I think there's some lineage there. Obviously, I think it's probably hereditary to some extent that I kind of went into this space. Probably, but I have to say, I asked myself many times, like, why did I do this? I should have been in a different business. And I ask myself that all the time. I'm still trying to figure out what I want to do when I get older, type thing. But yeah, kind of that's kind of how it started. And I always really, really liked the idea of being in finance.
That's very interesting. So most people, myself included, we didn't grow up in a place where there was any sort of financial education from our parents, because our parents didn't know it, their parents didn't know it. But you have a very unique background, Patrick, in that your family is kind of steeped in this ethos. And it seems like you said your sister, your aunts, your uncles, everyone's in this. So when you're growing up, what did your parents teach you about finance? Like, did they teach you specifically, sit you down and show you things, or was it just you modeled to you? Or do you remember any of that kind of stuff?
Yeah. So look, I'm a parent of a bunch of kids as well. 27 all the way down to 16, and so I think the idea of teaching really starts with example. And so if you're going to teach something, you have to show the example. And so my parents really showed us the example as kids, how to struggle, how to endure adversity and chew through adversity and beat it, and how to always work really, really hard. So I was very privileged in the sense that my old man, he was a great example on how somebody works to their bone, till the 11th hour. I mean, basically would work all night long. And rinse and repeat and do the same thing again, but really showed us as kids how to make those sacrifices, such that if you want to be, and run your own business and do it very successfully, there's an enormous amount of sacrifice and pain and suffering, and once again, and discipline, and I would say absolute, I would say core values that really come into play that have to stick, and they have to be always there at play. And so, like I said, I was really lucky to have that example. Now, at the end of the day, it's not for everybody. Getting into a business where, you're living tooth and nail and you eat what you kill type thing. Like I said, it's not for everybody. But like I said, when my parents and what they taught was really example. And that example is something that's always kind of carried through, in the sense that, like I said, there are a lot of folks out there who think that success comes easy. Sure it does sometimes, but in the real world, let's face it, it takes a lot to get there. But yeah, so that's what I really learned. And I learned also, look, it's not about how much money you make. Money is actually kind of a secondary thing. It's more, what is the nature? What is the role that I'm doing? How am I helping my fellow man, in a better way? And how am I, actually kind of, I would say, giving my best, at this role, and how am I really, once again, leveraging all the things that I have, specifically to the things that I'm the best at, to accomplish, a really fun, enjoyable, and productive mission. And I think that's definitely always lost out too, because people always think money is the first thing. It's actually the last. So
I would agree with that. You mentioned a few things there about growing up with your family, and it wasn't like they modeled to you that this is how you interact with money, but money isn't the main goal. The main goal is you mentioned the words discipline, you mentioned the word sacrifice, you mentioned hard work. And I think, especially in modern day society, we look around and people will go to social media and they'll see all of these people who just say, I didn't have to do anything and now I'm a multimillionaire. And everyone kind of now they anchor themselves to that is possible for me. And just like you said with your parents and yourself, and I'm sure you're modeling this for your kids, yes, that makes for a great story, it makes for a great short, a great soundbite. But in reality, it is the hard work, it's the dedication. And maybe the secret is there are no secrets. It's you just have to work every freaking day and get 1% better. So how have you modeled this for your kids? Because you grew up in a different time. And with me starting to have kids, that's something I worry about, that they get to see the world and tell people, just tell them it should be easy. It should be at a snap of a finger that you become successful. I think I saw a survey recently that they asked the average people by their generation, millennials, Gen X, Gen Z, what would make you a successful salary? And I think for, the baby boomer generation, it was like $90,000. Then Gen X was like 120. And then the millennials were like 140. And then you got down to Gen Z and Gen Alpha, and they were like $500,000 because they're anchoring to a number that they see online. So how have you been able to model that for your kids in that, it does take work? And yes, there is a lot of people that might claim to be successful while not trying, but you're not going to be that one person because there's one out of a million and everyone focuses on that one person.
Sure. So, so that's a really interesting thing. I was really lucky. I'm turning 53 in about a month. I was really lucky that I didn't have any of that nonsense like social media, or any of those types of pressures growing up as a kid. And I can't imagine how awful it is for this younger generation to model themselves after that nonsense. And I really believe it's all nonsense. And I hope it all comes to a crashing halt, because it's not been productive for mankind at all. Has not been productive for young women. I think it's definitely been destructive for young men. And I think, these heroes, and these false idols, they really are just distractions. And I think they really do cloud people's judgment. I think at the end of the day, though, Chris, the messaging has to be consistent with children, and how you really kind of show them the pathway forward, and that is once again getting back to core values, and those core values are hard work, it's discipline, it's doing something that you like, but doing something that you're really good at. Because, if you think about everything, everybody's got, something they're really good at. And then they've got something they're a little less good at, and then a little less good at, a little less good at. Everybody tries to focus. And so think about it as concentric circles. That's a great thing that I teach my young guys, and even my kids now. But, when I run sales forces, et cetera, it's like, okay, think about the best thing that you as Chris, that you have in your ability. Perhaps it's sales. So that is the number one thing. Next thing, what's the next thing? Well, the next thing maybe is, and I do great analysis on things. That's the next concentric circle, and so on and so on. But you get the idea. People build out, their personalities and their talents around, 50 different concentric circles. Well, what they should be doing is focusing on that number one concentric circle, the one that they're the best at, whereas everybody tries to fill all the blanks with everything. And I think that's another, important thing to note when people are looking at what they want to do and how they're going to get there, is look at the thing you're the best at. Focus on that, because that's your real raw talent. Forget about all the other things, because they'll have a play, they'll have a role in it at some point, at some level. But if you're the best salesperson out there, then that's what you're going to focus on, and you're going to you should model yourself around that more than anything else. But look, at the end of the day, it comes back down to that messaging of, once again, find where you're great, find out, where you're going to add the most value, forget about the money. 500 grand, that's a really smart idea. That's never going to get anybody anywhere. think about think about spending less, because consumption, you don't need most of the things, probably at least half the things people have in their lives they don't need. Think about making those sacrifices, spending less, saving more, and doing something that's really, really productive, and that really, really fills your bucket, and adds value. um, I don't know. Like I said, it's hard to pontificate about this stuff when I've done it wrong so many times in my own life, but I've learned the lessons, and I've certainly learned from other people who are much better, much smarter than I am, and much more successful, how they did it, and it was really built around those types of principles for sure, and there's no denying it. So you look at a guy like Elon Musk. I mean, he's one out of billions. Nobody should ever model themselves against Elon Musk. He's just unbeatable. You have one person like that in 100 years who's a visionary, an absolute. I mean, let's face it, he's probably from Mars. He's not from this.
Yeah,
from
he
this
wants
planet.
to go back home.
Yeah. But you know what? He's, once again, that's not what you model yourself off of. You model yourself off of the people who really struggle. So, for example, I saw a thing the other day about the guy. I forget what it was, but he bought I think it was the guy who built Raising Cane's. Great, fried chicken place. I love Raising Cane's. Big fan. My 16-year-old. I mean, she can't stop dragging me there. But you think about that story. Where he really, just worked hard, struggled, took risks. And did the things that were needed, but also had a lot of lumps and a lot of beatings and complete beatdowns along the way. But like any good fighter, he just kept moving forward and never gave up on the idea, and the business and the people and the product. And that for me that's where people want to focus on. They want to focus on the people like that out there. And their stories are everywhere. You look around the corner, you look at the guy running the auto body repair shop, like that guy, he's been running that business for 40 years in a lot of cases. Usually his wife, his daughter, and his son working with him, maybe a couple of uncles and other people. But those are the kinds of businesses, I think. And those are the kinds of examples I think that people should be focused on. I don't think they should be focused on these, like I said, these false idols who claim to be really great, but they're really not. At the end of the day, easy money comes and goes faster than it's made. So makes sense.
And yeah, it does. And I would say for a fulfilling life, you need that failure and that success. You need to, Jordan Peterson says we as humans are meant to walk uphill. And if things come too easy to us, we have a propensity to self-implode that. Now, I would like to go back before we get to your history, back in the 90s. Technology has moved so quickly. And you said that your oldest, I believe, was 27 and your youngest is 16, correct? So yep. I'm sure just over that, 11 years, a decade, they've both had completely different lives, just in terms of what technology they've had. Have you noticed a difference between raising your 27-year-old and your 16-year-old and trying to pass on those values that you want, those good core values to them with the advent of technology that they've both seen and the unique lives they've lived in?
So I really haven't, Chris. My son, he grew up, I guess, in the early 2000s mostly. And, my 16-year-old, gosh, my wife's going to kill me if I forget her birthday, but she kind of grew up the next decade after that. But anyway, so, there were very similar parallels on the technology side. But I think, I think what he experienced was, and once again, these are boys and girls, totally different in many ways. He was a video game guy. And so, he loved video games. Like he would play GTA or whatever that game is all night long. He'd communicate with friends, with the headsets and make friends all around the world playing these games. My daughter, my youngest, social media is a huge thing. And so, but her generation, though, is not like my middle daughter's generation in the sense that those girls, in particular the girls, they really, use social media as ways of, kind of seeing what everybody else was doing. They were really susceptible, I think, to the marketing that was, kind of pumped out at the time, which, was just nauseating for an old timer to see. Um, 'Cause it really is, like I said, horrible stuff. I personally believe. But the younger generation, the 16-year-olds out there, they really are, they're using it more for different purposes. They're using it to, kind of, hey, we're going to go to the beach or something like that. And, or we're going to go skiing. Let's see where our friend is on the ski hill. And so they're using that geolocation type stuff, which is embedded in a lot of these apps to communicate and find friends, etc. I think they're a much smarter and a more ruthless generation, which really is encouraging, if you ask me. They are tough, tough, tough. So I don't know if they're the Gen Z or whatever, but whatever they are, that generation, 16-year-olds today, and 16, kind of 18, that area, man, they are tough. They are take no prisoners. And it seems like the generations are getting narrower and smaller, and they're getting more compressed, more than they used to be. So the baby boomers, that was a 20-year gap. Then I think for guys like me, I think I was Gen X or I
Gen
think,
X,
yeah,
yeah.
yeah. So I was Gen X. So, that was a 10-year, maybe 15-year period. Then there were the millennials, which was a, smaller period. So I think things are changing a lot faster, likely because of technology, Chris, and the role that technology is playing more and more in people's lives now. And AI isn't going to change that. AI is probably going to speed that up considerably. Which if it's used for the right purposes, great. If it's not, then once again, it's another bad thing out there. But yeah, once again, I tend to be a bit more optimistic than most on where technology is going to go, because I see how the young people are using it and leveraging it for productive purposes, rather than the garbage of the past that really bad people used to pump out and poison young minds with. I think a lot of that has found its course, and I think it's actually kind of run out of steam. It's no longer the fad. It's kind of not cool anymore, which is great.
That's wonderful. And thank you for giving me hope that the younger generation is figuring out what my generation failed to do so, and the generation after me. And I kind of think of it like concentric circles, like you spoke about, but in a circle that is constantly spiraling up. And each generation needs to find that top, and then the next generation might fall down, and then the next generation goes to a higher level, and we continue to ascend to higher levels. Now, I'd like to move back to you joining the financial service industry and kind of learn from your experience and what you've seen over your many decades there. So could we go back to when you actually started in the financial services industry? I believe you said it was in the early 90s.
Yeah, sure. So it was an interesting time. So, the late 80s saw a real meltdown. There was a bad recession. So housing got pummeled. There was a lot of, and so this was following 87. So 87 was really bad. It was, I remember living through 87. It sucked. But at the same time, the world came back very quickly after 87. It was a very, very short-term shock to the system. And then you ended up with a recession in the late 80s going into the early 90s. And so that's when I came into the business. And I started out as a stockbroker. And I thought, okay, this is an interesting business. I loved the fact that, you could be in a bullpen with a bunch of other men. Literally back then, you might have had one gal on the floor with you. But they were really tough. They were, no, they definitely, and they got there through merit for sure. There was none of that DEI stuff going around at the time. And people had to deserve and earn their seat at the table back then. And it was old school. It was, really, bring in the commission dollars. If you bring in your commission dollars, not only do you keep, kind of your job, but you can move into an office, you can get more support, et cetera, et cetera. So it was a real cutthroat business back then. And you learned how to be a really good salesman back in those days. You were taught, and the people teaching you sales were really great. And you had a lot of independent little shops out there who were doing terrific, fabulous work. Unfortunately, what's happened since then. I'll get there in a sec. But those little shops, unfortunately, are no longer around. But like I said, it was a fast business. It was very lucrative. It was very exciting. I mean, I remember even in the early '90s, they would have a drinks cart come around the office. It was right when cigarettes, people were still smoking at their desks. And I'm not kidding. Like, you had ashtrays that were, this big. But, at the start of the day, they'd be empty. At the end of the day, they'd be totally full, like brimming over the top. It was definitely an interesting time, but and it's changed so much, as you know. But what happened, though, in that business, I can kind of tell you what I did after that in a sec, but the progression in that business was really, and I noticed it was happening, kind of mid '90s into the late '90s, was the big banks and, the bigger brokerage houses, like the bulge bracket firms, really were pushing their retail sales folks. There's two sides of the business, retail and institutional. And stockbrokers were really retail at the time. Although I have to say, we all had lots of institutional accounts, but they said, okay, no longer are we using the word stockbroker. We're going to use the word investment advisor. Or I think the other one was financial advisor. And so that really changed the tenor of the game a lot, because no longer were you, really out there, kind of stock jockeying, pumping stocks out, building portfolios, helping people make money that way. The bulge bracket firms and the big banks in the world saw an entry point for their own products to be at the forefront. And so, they're always looking at ways of improving their own margins and improving their own top and bottom lines. Fair enough. So they squeezed stockbrokers into that role of financial advisor, investment advisor. Now, a lot of stockbrokers at the time, resented that. They just thought this is the worst because essentially they were being forced to sell products they didn't want to sell. And they were being pushed to a fee-based mode, which a lot of those, those I call them old timers, really resented and they didn't like. And what it did, though, in the end, is it really gave the bulge bracket firms and the big banks the ability to essentially, once again, just offer people their own products, and specifically their own products. And it really destroyed the whole business. And in fact, it didn't just destroy the business, it's actually destroyed the whole small micro nano cap market, because the biggest supporters like RIAs, stockbrokers, etc., the RIAs of the past, the growth in the economy from those smaller companies was phenomenal. It was massive. It was a real anchor for the rest of the world and the rest of the market, the mid caps and the large caps. And when that model changed, like I said, they just absolutely destroyed that smaller, high growth, newer company, that new innovation aspect of things. And that's where New York and Wall Street really, and I'll say Canada did the same thing with their big banks. It was atrocious. They really, like I said, with the assistance in some regard of the government and the regulators, they squashed the market, and they killed what used to be a great industry of smaller companies and innovations. To continue to go. And so right now, as an example, many years later, you look at a small micro cap market. I mean, the ability to fund, to sustain those companies, it's next to impossible, which is a real shame, because I think longer term that, and I think you're already seeing it in the economy and in the bigger picture right now. I think that, that lack of support for those smaller, once again, innovative, companies. I mean, it's the one thing that Trump's trying to figure out. How do I impose, tariffs now on, other jurisdictions that are making things cheaper than my own people are able to. And it's like, okay, well, guess what, man? Maybe you should think about, kicking Wall Street in the behind a little bit, telling regulators to slow down and allow people to come back into that small micro cap, nano cap market and support it. Because right now you can't. You call a stockbroker out there, you want to buy a small micro cap stock, you get the same response almost always. It's like, I can't do it. It's not on our recommended list, which, like I said, that's an atrocious outcome for what used to be a great market. But going back to myself, which I always like to talk about, when I got out of, the stockbroker investment advisor business, I saw, and so I was also very, very heavy on the bond side. So for me, the bond market was my biggest investment or my biggest focus. Yeah, sorry.
And before we move on there, Pat, would you mind? Because most people, I think when they think of finance, they think of like a wizard behind a curtain who like makes stuff happen. They have no idea what that means. Could you explain when you were a broker? You started back in the industry. What is it specifically that you were doing? I know you said you brought some drink carts. That were everyone smoking cigarettes, having fun. But what was the job
Sure.
in itself?
Yeah, good question. So think about it this way. Every day you get to the office 7:30. You might have gone to sleep at 2 the morning before. That was normal course. But you get to the office. First thing you do is you think about, okay, here's the research call. So you always had research analysts talking about stocks and IPOs and things that the company was supporting and that they liked. So individual stocks always. And then you'd look at your bond sheets. And I was a big credit market guy. I liked bonds, and my biggest business point and the biggest way I succeeded in that space was in the bond market. Very contrary to most, actually. It was a very weird thing, but it actually, once again, and people still wonder, they said, well, why did you get in the bonds? Why were you so heavy back then, Pat? Now they understand it because, here I am, running a credit markets product company or credit product markets company. Anyway, so you would then basically do two things. Your job was to generate commissions, and then your job was also to build up new clients and build up, like I said, build up your book. So you would work on your existing book. You knew what people's investment objectives were. There was some KYC back then, enough to be dangerous in some cases. But once again, that was your job. Find good companies yourself. So you had to wear the analyst hat for sure, the research analyst hat to a large degree. Find those companies. Find out, what you thought was going to be the best and offer that to your clients. Then you would cold call, or you would cold call and have a team of cold callers, come in and basically help you build that book. So I had a team of about 15 cold callers in some cases. They would come in at night between 6 and 9 p.m. and they would dial for dollars. You'd give them a phone book and they would just dial for dollars. And then from 6 to 9, I would be out on the road meeting with new prospective clients every night. And that was the kind of the role. Very, very fun, very stimulating. But once again, it was a business that, in some ways it had to change. It had to evolve. But it was also a business where, like I said, it supported the high growth, innovation market more so than anything else today. And I think that's, like I said, that's where things have changed. But yeah, that was the role, Chris, in a nutshell. It was those, 2-3 things that you did day in, day out. You lived, slept, and breathed that stuff. But for me in the bond market, my clients wanted real, and they were mostly institutional clients. They wanted, preservation of capital. They wanted, bonds that had, big coupons and nice yields on them. So innovating new products in the bond space was something I was always doing back then. In fact, I structured, whole bond categories that weren't around before that in some cases, which was really, really fun. And it's, like I said, it's carried through to what I'm doing today.
So right after you left, regulations started coming in, things started changing. They started moving away from maybe a commission based to now it's a asset based management or fee only or fee based. What after that? Where'd you go from being
Sure.
your broker days? What was the next step in your story?
Yeah, so I went into the institutional sales side, Chris. And institutional sales side, I worked with a smaller firm that, really was, and it had historically been oriented around the small cap market. And so I wore that hat for a while, but then I realized that there was, another segment out there that was kind of missing. And for small caps and actually for private companies that were pre-public as well, I thought, what, great time to start my own investment bank. My own investment banking advisor. And I did a company called Tormont Group and Tormont, basically had a mandate to essentially help companies go public. So it was finding the best place to go public, which at the time was in Canada. Canada had a really great system for small companies to go public. And Canada at the time had a really, really strong, kind of small cap market, still moving. It's dead now, by the way. I mean, it's absolutely been obliterated. But yeah, but that being said, I think there are some green shoots, because at some point, things do come around a bit. But we can get to that in a bit. But yeah, so my role was really taking U.S. companies public in the Canadian system, through reverse takeovers, IPOs, etc. So there were a variety of companies, like I said, that were in all different categories of spaces that my investment banking advisory really helped them through that process, and got them, new shareholders, introduced them to investment banks, kind of ran the quarterback role in directing that, private to public genesis. And some of those guys did really, really well, which is terrific. So I did that. And then, like I said, one of those companies, funny enough, is the company that I'm currently filling the boots of CEO with, and that's the credit markets company. And so reluctantly, I stepped into that role as well, through my investment banking advisory as kind of a consultancy type structure. But I've been wearing the hat of this public company for a while, and I love it. It's great because we finally have a product which is about to launch. Actually, it's already launched. But it's going to be a game changer for the bond business, which is very exciting. And that's kind of where I am today, Chris. So
Wonderful. I would love to get that in just a second, but you mentioned twice now. So I think I know the answer, but I'm curious for you to say it. You said that the Canadian markets used to be, the bee's knees, and then stuff happened and changed. The American markets used to be it, and then stuff happened. What was that change that happened, and is there a way nowadays to maybe fix? Or I guess first off, what was that change that came down the pipes that made things start to go towards it's only big institutions? There are no more micro. It's just big institutions kind of gobbling up everybody else.
Sure. So a few things. The regulations, compliance, etc., became much, much, much more onerous. And maybe it needed to, maybe it didn't. I don't think personally it did, because you're always going to have malfeasance out there, and to destroy a whole system when you're just looking for a few bad actors. I think that's a really bad approach. And so I know from the bulge bracket mentality and their thinking, it was like, we need to limit our liability as much as we can. And in so doing, like I said, they squashed that whole business. And in so doing, once again, they made more money, of course. So they started to offer their own products. They then started to mandate their own products. They moved things away from commission-based to fee-based. And of course, if you're fee-based, I mean, are you really going to go out there and, peddle stocks all day long? Not really. You're going to look at building up your assets under management. And so those few little things are what really changed that market. I do believe there's a great entry point at some point to start, my own broker dealer, or for somebody to do so. But make it more around what things used to be. And that is, once again, buying and selling stocks, buying and selling bonds, building your own portfolios, giving your salespeople and giving the brokers, autonomy again, and supporting the small micro cap, nano cap market again, doing investment banking deals in that segment. I think that's it's a big, big void. Nobody's filling that void right now. And it's, once again, the compliance aspect of things, the regulations have just made it so prohibitive to do so. And so does that change? I don't know. I hope it does, because I can't see that these small companies, and I can't see that innovation comes back to the way that it was back in the day. Once again, everyone's buying GameStop, Nvidia, other stupid things. Great, have at her. But, back in the day, if you really were smart, you would find these really, small, high growth, very niche, but very innovative, opportunities, and you'd get behind them. You think about the big guys in the room today. I mean, they all built their companies around that small, high growth kind of, trajectory, velocity type thing. And that's, like I said, that's where the real value is today. Not knocking big caps and saying they're totally valueless. I just don't think that's a market segment that needs any more support. I think it's probably got too much support from ETFs and other things these days. So
I would agree. If I was conspiratorially minded, which I am, I would think that at some point the small guys who were innovative, they made their money, they became the big guys, and then they got in bed with government to create regulations in order to stop anyone else from coming in and impeding on their market share. And now they've basically taken everyone out. So just like you said, making your own BD from a compliance standpoint, it's almost impossible. Even if you got past the compliance, then you're going to have to market yourself, and you're marketing yourself against all these big people. It doesn't matter how good your product is if you're getting destroyed by the Securities and Exchange Commission, which is like, don't look at these people because they're bad. Everything is against you to change this system. I don't see a way out of it. Do you? I don't know how to fix it.
I think there is a way out of it, in the sense that nobody's really kind of gone into this space for a long time. And I think the regulators, the people at SEC, FINRA, up in Canada, I forget their name, but those guys, I think they understand that the liquidity in that small cap space has been decimated. They're smart cookies, and I think there's a way to work with them to make it so, and make it doable. And I think there's probably, once again, I don't think anyone's knocked on their door and said, hey, let's have a frank conversation about this. Let's discuss how this could work. And I don't think government is doing anything. I mean, I'm not sure they do anything in any way anyway, but, other than get us into trouble. But that being said, I think there could be a frank conversation. And maybe that's something that I do in my next iteration at some point. Because I would love to explore that, and I think it is doable. And like I said, regulators understand that they're not perfect. They do understand that they overstep sometimes, and I do believe that they don't always want to support the big guys. The big guys, when you got like a CEO of a big bulge bracket bank making $100 million a year, that's kind of offside. That shouldn't be. And I think that irks everybody. Like all of us small people, we're all just, and I include the regulators in that. We all just look at that and shake our heads. That shouldn't be. If that person is making that kind of money, then there's something wrong in the system. And I think regulators, if they know that there can be some competition that comes back into the market and actually gives those, big fat cats, some competition and a kick in the pants kind of thing, then I think they could work with a small newer company. But we'll see. Like I said, I think it's doable. But to your point, there doesn't seem to be a lot of promise out there right now in that small cap market. It's actually I think it's getting worse by the day, which is unfortunate. So
you do give me hope in saying that the regulators, from your standpoint, they understand the reason that you need competition. You need competition in order to incite innovation. And for too long, if you're the biggest person in the pond, there's no reason for you to innovate. Like you're winning. No one can eat you. But until everyone kind of says like, we need to all unite against this person, or we need to figure out a way to at least have a fighting chance, like at least a fighting chance to try. Because if you believe you can't, then you're exactly right. You're never going to try to take the steps to even try to fight that battle. So let's move on from, you said you would move to institutional for a little while there. And now what are you doing? Or is there anything in between that we should touch upon before moving on to where you are currently?
Yeah, no. So, I mean, DelphX Capital Markets, that's the main hat that I'm wearing right now. That company in and of itself it's at a basically a turning point. Like I said, I reluctantly stepped in to take the company to where we have it today. But, we had to clean the deck. There was no real product in the company. So we really had to basically design a whole new product from scratch. And the way you do that is you listen to your customers. And what we did is we canvassed, the street. We canvassed, people who run institutional money and hedge funds and others, and said, what's your pain point? Where are you suffering today? Where, when you do your daily, your day-to-day stuff. Now, hedge funds are easy. It's like, okay, we need to make bigger returns. So that's an easy one. But when you talk with insurance companies as an example, it's like, hey, insurance company portfolio manager or chief investment officer, where are your pain points? And what we discovered was their pain points was when their bonds get downgraded, and they're some of the largest owners of U.S. corporate bonds in the world is the U.S. insurance companies. And they said, look, our real pain point is when our bonds get downgraded, the regulators, once again, the regulators, they come in. Well, insurance companies is different, though. The regulators actually, they are needed, and they are good because policy. If you die, you need to make sure that your life insurance policy is going to get paid. So that's a good one. That's a real good one. But yeah, so when their bonds get downgraded, they have to put more money into reserves. It's a risk-based capital. They have to cover those charges, and there was no product like that out there. So we listened to them. We spent, lots of shareholder dollars, and thank God we have the best shareholders on the planet within that company. I happen to be one of them, but shareholders who always, supported us, supported the idea of what we were doing. And probably, like I said, I think the best shareholders on the planet. I don't think you could get it better anywhere. But, they took the risk. They stuck with it, and they understood what we were doing, to the point now where we have a really great product that nobody else has. We're first guys out of the gate with this product, and we have hedge fund relationships and now insurance company relationships that are, once again, negotiating final terms around, future transactions, which we, expect to happen, pretty soon. And that is really an interesting experience, because walking into a broking company, having to, like I say, clean the decks, which was a lot of litigation, a lot of other nonsense that didn't have to be, but then, really explore the product and find out there was no product, but then take advantage of that situation and say, okay, well, gosh, why don't we design a new product? We're already here. Let's try to make everybody whole on this investment. Let's see what we can do. And to get to that point and to spend years developing it, working with legal, because once again, this is a regulated product, working with everybody on the regulatory side and others, but then also selling the product, marketing it, building out our own sales force, etc. And recognizing that Wall Street is completely lacking any bandwidth for new products and innovation. Because we marketed this to Wall Street dealers left, right, and center. None of them, except for one, with a very special dealer named Castle Placements, who we teamed up with. None of them had the bandwidth. None of them had the courage. And I hate to say it, most of these Wall Street broker dealers, like the big to the small guys, it's mostly run by, I would say later age guys primarily, who are they're sitting in the seat hoping for one or two more bonus cycles. They're all terrified of losing their jobs because they're making so much money. They realize when they're after the age of 50, good luck getting a job back in the business, doing the same thing. Nobody wants that. Everybody wants young people to work with. And that has always been the case. It still is today. So once again, there's a reluctance from basically U.S. capital markets to take any risks, largely, like I said, because the people running the show are, I hate to say it, it's older guys just looking to cover their asses for, maybe 1 or 2 more years type thing. And they just are completely risk adverse for many different reasons. But once again, there's an opportunity, Chris. Here we are, small, little, tiny company. Nobody knows us. And we developed this new product that nobody else has. They're all going to want it, though, because it really is like, we've built the ark, and the minute, one animal goes, or one group of animals goes on the ark, they all pile on type thing. Because in Wall Street, P&L still matters a lot. Don't get me wrong. Once again, it's creating an opportunity in an environment where these opportunities exist. You have to know how to do it, and try your hardest and work really hard at doing it, and sacrifice a lot, which, when you run a company like that, good luck having a night's sleep. You're never going to have it. You're always going to be up at 3 a.m. in a panicked sweat, which applies to any business where you're working and, kind of driving your own shingle, I think. So
you used the word, you reluctantly took on the CEO realm for DelphX. A few times you used the word reluctantly. And I have to imagine you mentioned it in there, that the reason was because when you came in, there didn't seem to actually be a product. So you had to go and make the product. Am I correct in that assumption, first off?
So I knew that there were some bad actors in the company that I had to get rid of. And I also knew that, the guys like myself and my buddies, a lot of us, who are our shareholders, and I consider all of the shareholders my friends now because we've worked together for so long. We all said, "Gosh, let's do this." And I thought, okay, I can make my guys whole on this one if I give it a shot. 4.5 years later, it's not been an easy slog. It's been a real arduous journey, and it didn't have to be, but it did in a lot of regards. In the fact that we did have to design the new product, we had to really learn, what investors and what people needed. Which once again, it's a process, as is the legals, as is everything else around a product like this. But reluctantly, yes, because I was running an investment banking practice that was, doing very, 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 very well, and it was consistently doing very well. So coming to something where you're not making any money is a very big sacrifice. Now you have equity in the thing, which is great. You continue to build equity in it. So the idea is at the end of the day, you end up ahead of where you would have been had you been consistently working with the old business. But yeah, once again, it's a sacrifice. But it's one where, once again, the money doesn't really play into it so much so as, this is a really interesting space. It's a really fascinating experience. And I've been very fortunate to have the experience of being the CEO of the company. And it's also been something that's really, the learning curve is insane. You learn a lot when you're wearing this hat and sitting in this seat. So, yeah. So reluctantly, yeah, perhaps at the time I was reluctant. In hindsight, I should have been a lot more reluctant. Probably, I would have done a lot better, but I wouldn't have learned as much, I don't think, and I wouldn't have had this type of experience, which has been great.
I'd like to ask you. So when you reluctantly took the job, and you've mentioned you did it because you wanted to make your shareholders whole. You did it because you wanted to learn, to grow. What was your main mission? What was your why specifically? Not the company, but you, Pat. What was your why? Your mission for doing this, for setting out on this arduous journey?
Yeah, good question. So, look, man, I owned a lot of equity in the company at the time. My pals did as well, and I really took it as an affront of what the management of the company had been doing, which is wasting our money. And I thought, okay, I have to see what's really going on here, and see if there's a way that there's can I build a pathway forward? And I knew that I was walking into a bit of a disaster. But didn't really know exactly how bad it was. But when you take on that role, that responsibility, you do have to think about shareholders first, and you do have to think about what's right, and you do have to think about, what, I'm not going to lay down. Anybody who steps in the way, they're gone. So you have to be very cutthroat, but fair at the same time. But once again, when people aren't being fair in return and they're doing things that are not good, you have to get rid of them. And then not just that, then you have to accept that the product might not be good. And the faster you get there, the better. So it took us a long time to figure that out because we didn't really know what the product was. It was, the product that had been marketed was, it took a long time, like I said, to figure it out. It was insane, actually. It was a nuts product. There's no chance in any world that it would have actually succeeded. But that being said, once again, cleaning the decks, rebuilding a whole new company, building a whole new group of people, from the CFO to the general manager, then to eventually, rebuilding the product with great external advisors. So people who had worked in the business before, who really understood the product. That was a huge plus, and we're very, very blessed to have those types of people in our organization. A lot of them, you look at the press releases, they're on there. You can see that the pedigree and the provenance of these people is huge. So we're very fortunate for that. But once again, the other thing too was, building out the sales force. We realized that Wall Street wasn't going to support a new product. We thought, gosh, how could they say no to this? This is a no-brainer. They all came back. No bandwidth, no bandwidth, no bandwidth, which means no courage, no courage, no courage, no innovation, no innovation, no innovation. And so we said, okay, well, how are we gonna get through that? And so it's always so we built our own sales force, and so if you think about it, it's one hurdle after another, which is very exciting. So if you ask, why I'm doing this, it's great. We're building value. We're building a team. Our organization is strong as ever. Everybody works great together, and we have a really, really solid group of people, like I said, all the way from the board to the shareholders to the sales team to general manager to the C-suite. Once again, it's a cohesive group. Everybody gets along, and everybody knows what the mission is, and they're all making the sacrifices to make that mission happen.
And with that being said, for the layman person, what is the mission of the company?
Sure. The mission is actually to provide a new product for insurance companies and hedge funds, which allows them protection and higher returns, in a whole new asset category. Our objective is to really show the world and build this product out such that once again, we do very well for the company and for shareholders, because that's got to be the number one goal always. But also, there's some joy in the fact that we're accomplishing something that nobody else has done, and that is, as an independent little company, come out and build a product that is going to be adopted by the street in a big way, and that's very exciting. So the last big product like ours was credit default swaps, which JP Morgan developed with it took them a team of 100 people to build the product back in '94. Here we are, a small little, tiny little public company, doing this, with very limited reserves and cash, et cetera. But, there's joy in actually doing something like that, being a small, like I said, little SWAT team like we are. So does that, I mean, I hate to use a lot of I hate to use a lot of empty rhetoric, but if I can articulate it in any way, there's a joy of really saying we told you so, and there's going to be joy in that, yeah, because once you launch this product, everybody will want to use it, and it will be really nice to say, hey, we did it, told you so.
I always enjoy bringing people on like yourself, Pat, who are entrepreneurs, someone who understands that when I set out on this adventure, it's going to be hard and it's going to be arduous the entire way. And I call it the physics of progress. Just like in physics of real life, like you have to struggle, you have to grow, you have to, after you set off on this journey, look back and be like, oh, damn, I should have stayed on the shore. Like it's so much easier back there than it is here. But it's only through going through this journey and going through the hard times that we get to see how far we've come. So it's good to see that, because you mentioned that like you thought you had a plan, and then you realized, oh, it didn't work. And then you had to go back to the physics of progress and figure out what's wrong here. What did we get wrong? Now we have the product. Let's go and market it. Well, the marketing's wrong. Physics of progress. I have to go back there and figure that out. And you constantly have to do this over and over and over again. And what I've gained from talking with you today, and I hope our audience has too, whatever plan you think you have, it only works because it's in your mind. And in your mind, you control all the variables. But just like physics, you don't control any of the variables. You have to go out into the real world and you have to test your hypothesis, just like a scientist, realize where you're wrong, and go back to the drawing board and try again and try again. You have to stick through that hard time, that discipline, that hard work, that effort to see things through. Because if you think it's going to be easy, the moment you hit your first barrier, you're going to be like, oh, well, this is done. It's supposed to be easy. In my brain, it's easy. I'm done. And that's just not the way you're ever going to succeed if that's the way you think.
Yeah, absolutely, man. And the one thing that I would also just say, and this is one thing that I've always thought, especially for people who are considering, a career in financial services or elsewhere, we have a moral obligation to take risks. And it really is, it's an important obligation. We should all be teaching the younger people, especially, that is the role. And we should always be reminding ourselves that we should always be taking calculated, smart risks. And so your analogy of being on the seashore is great. I don't think anyone should stay on the seashore. I think we should all be out there sailing and searching for new lands. Really, that's what makes a very successful, productive society. Even if it's in a role where it's a job, within that job, you can perhaps speak up a bit more, or you can do something say something a bit more that you think could be, more innovative and would be more, productive to the organization or to the team. That kind of ethos, that mentality needs to come back. And I think it's been lost a lot. But that's the way that we kind of are doing things at DelphX. And certainly that's the way I've always kind of seen doing things as well. Sometimes it doesn't work out, though. Most of the time it doesn't. And that's the thing. So once again, am I a glutton for punishment? Perhaps in some ways. But once again, when those risks show value and they show positive returns, that's a great outcome. And I'd rather have 5% of that kind of an outcome and 95%, struggle than not have that at all. I don't know if that resonates, but
I think it does. And I think even if it doesn't work out, even if it fails, you still grew from the journey and you get to take that to the grave. And I think at the end of your life, when you look back, from a concept of like, this all will end, are you going to look back and regret the things that you tried and failed at? Or are you going to regret the things you were too afraid to even attempt?
Yeah, 100%. I mean, how many movies do we see about that? Where at the end of the day, the guy or the gal, they feel terrible because they never took the risk or whatever, and it's 100%, Chris. Totally agree with you. So
wonderful. Now, I have one more question before we close out, but you've been such a kind guest today, Pat, in sharing your experience, your knowledge with us. I'd like to give you the podcast for a moment and allow you to share yourself with the audience, tell them where to come to learn more about you. Anything, floor is yours.
Sure. Gosh. Well, I think I've shared enough. I mean, I would, like I said, I think, people should kind of listen to some of the things that I've spoken about, because I think, like I said, I study this a lot. I know the people who have done it very well, who are very, like I said, I hate to use the word fulfilled in life. I don't think anyone's ever really fulfilled in life, but, I would say this, look, go out in the world. If you're in the world, great. But, once again, think about, what you're going to do next and think about how you can improve what it is that you're doing. Focus on that one middle concentric, that circle in the concentric circle, kind of diagram, and take those risks, whether they're whether they're going to pan out or not. To your point, they have to be smart risks. But they might not always work out. But always be willing to move the next step and forget about money. Money leads to other problems that, and there are no happy billionaires out there. Put it that way. They have other problems that are in some ways, much greater than ours. And so I think, once again, that journey that I've had, I would never want it for anybody, in the sense that, there's been so much struggle, so much abuse and all the rest of it. But at the same time, it's somebody else's story. It's my story. And I think, if it could be helpful to anybody who's out there, kind of in the same category, same world, or who's thinking about it, I hope it's helpful for them, what I've been able to share. But I would always say, stick through it. Just pick yourself up, dust yourself off as much as you can, and just every new day is a new chapter. I think about it that way, and a new opportunity for sure.
I do have one other question for you. Earlier on in the podcast, we talked about these people who are in the C-suites for the larger firms, and they're just saying, I have a few more years of making my bonus. If I keep on continuing, then I'll finally have enough. And that magic word of what is enough is so scary, and that's the reason that the podcast is called The FI Guys, the Financially Independent Guys. And we are an offshoot of the FIRE community of financial independence, retire early. I don't believe anyone should ever retire. You should continue to grow, but it comes down to that. What is enough? So we always ask the question, what does financial independence mean to you, Pat? What is enough?
So look, man, having money is not a bad thing, but at the end of the day, enough. Well, I have a great friend. He was, Harvard grad, guy was running investment banking for one of the big, big bulge bracket companies for years. And anyway, he ran into some personal issues, et cetera, which kind of set him back. And, I think his realization that, investment banking and finance wasn't actually for him, kind of set in. But, he's now living a life that is very, very, very great for him. And he's doing great. He's saving his money. He's, building value, in another country. And like I said, and so I asked him, I said, what's your secret? And he said, you know what, Pat, he said, it's not about how much I'm making. He said, it's how much I'm not spending. And I think when you talk about financial independence, that's a huge thing. Too many people have a big nut. They got to cover that nut, and that nut guides their lives. If you can cut that nut back, and we all can. I mean, I could do it myself. I mean, I need to get off of Amazon. I'm hopelessly addicted to Amazon. but if we could all do that, and still buy ourselves, the little toys and things, then that's the biggest step. It's spending less. And I think, in the world of consumption, if you can consume less, that's probably the biggest step to financial independence. Other than that, once again, I think people should do the normal things that they do in life. And that is, make sure they've got disability insurance, life insurance, all those other types of things that just go without saying, because that could really set people back. And that's unfortunate when that kind of situation happens. But otherwise, like I said, people should stay healthy. They should also focus on, doing things that are the smartest things for them. But, financial independence comes with lots of sacrifices. But it also comes with great joy, because I think when you get there, you're pretty happy. So you think of a guy like Joe Rogan as an example. He did a podcast recently with another guy. I forget the guy's name. I'm terrible with names sometimes. Anyway, they were talking about, well, what does it mean to be financially independent? And Joe Rogan said, he said, for me, it's not about the money. He said, I really, I like to buy myself little toys every now and then. He said, I drove to the podcast in a 69 Camaro. But, at the end of the day, it's doing what makes you happy that makes you financially independent at the same time, and adjusting your lifestyle toward that. But I think in general, we could all spend a lot less and save more.
Yeah.
So
I think you said earlier in the podcast that money isn't the goal. Money is just the means to the goal. And the goal should be to,
Sure.
try to live the most fulfilling life that you can.
100%. Man.
I'd love to just thank you so much for coming on, sharing your wisdom, sharing your insights with myself, with our audience. And for our audience, if you guys got any value today, please like, subscribe, leave a comment, up to a 5-star review. But most importantly, share the podcast with one friend that you have. Bring somebody along on this journey to financial independence, because you can go so much further together than you can alone. And this journey of financial independence, it's not a fast one. And there are going to be hiccups. There's going to be times where you're going to run up against the physics of progress. And sometimes doing it alone is the hardest thing. But to know that you're there with another person who can share their insights, share their guidance, just be there to say, I see you, and we're going to make it through this, could be all that you need. Thank you all so much.
Thanks, Chris.
This video podcast is sponsored by Monzon Wealth. The content in this podcast is for informational purposes only and should not be considered financial advice. We do not endorse specific products or services. Past performance does not guarantee future results. The opinions expressed are those of the hosts and guests, not the podcast sponsor.
It is crucial to consult with a qualified financial advisor or professional who can provide advice tailored to your specific needs before making any financial decisions, investments, or taking any other actions. If you are seeking specified help, you can reach out to Chris at monzonwealth.com.